Now, the banks are saying it's all calm, modest growth, steady recovery, nothing to worry about. But that is actually not what the data is saying or what we're hearing on the street, because yes, the averages look pretty calm, but underneath, certain segments of the property market are about to go absolutely nuts. What I'm talking about is affordable houses, townhouses, and apartments in good locations under that $1 million mark with strong rental demand. That's where the real chaos is brewing. So today, I'll show you why the bank's forecasts missed the mark, which parts of the market are heating up fastest, and what this means for your next move. So this is your daily property update, your 5 to 7 minute update on the property market every single day so that you can be a property insider. Make sure to hit that subscribe button so you get your daily property update every single day. Now let's start with the headline view. Commonwealth Bank, Westpac and ANZ, they're all predicting around 4 to 6% growth in 2025 and potentially 6 to 10% growth in 2026. Now that sounds pretty calm, right? But those are averages, and averages hide the extremes. Because when you zoom in on the affordable end of the property market, it's a completely different picture. CoreLogic's latest data shows prices are rising fastest in the lowest price quartiles of every major city. Brisbane, Adelaide, Perth, the affordable belts are running red hot. PropTrack says it's the same story nationally. The most affordable 25% of homes have outperformed the top end all year. So while the banks model modest growth, the real heat is where first home buyers and investors collide. And that's exactly what is happening right now. Now, some of the things that are impacting this, of course, are the 5% deposit scheme, which has unleashed a wave of first home buyers. We're seeing first home buyers at record levels. At the same time, investors are piling back into the market. This is because rental yields look solid, vacancy rates are still near record lows. Now, these two groups, investors and first home buyers, are targeting the same price band, under $1 million, often under 800K. And they're fighting over the same stock. Add tight listings and a population still growing fast, and you've got a supply and demand squeeze that no bank forecast can keep up with. Now let's talk about apartments. Now, for years, everyone wanted land, but affordability has flipped that on its head. More buyers are looking at well-located units and townhouses within 15 to 45 minutes of CBDs, close to jobs, trains, cafes, and lifestyle. Developers are finally picking up approvals again, so we're seeing approvals jump in this sector, but completions are still years away. That means demand is hitting the stock on the market now, and that stock is very limited, and prices for good apartments are starting to move. If you want proof, look at auction clearance rates in Sydney and Melbourne's inner ring suburbs. Apartments are selling faster, often with multiple bidders. So while premium houses might tick along slowly, apartments in the right pockets are becoming the new battleground. And here's the part the banks can't model: human behavior. Buyers don't move on averages. They move on emotion. They see everyone else buying again. They worry about missing out and they rush in. That's why the chaos in the market isn't uniform. It's concentrated in the affordable zone. The affordable zone is going to feel absolutely wild, while the premium end is just going to drift. Ultimately, what does this mean for you? If you're buying under $1 million, expect fierce competition. Be pre-approved, be decisive, and move fast on quality listings. If you're an investor, focus on affordable apartments or townhouses in strong rental corridors. That's where demand is thickest and yields hold up best. If you're a homeowner above the median, you'll have more stability, but don't ignore the ripple effect. When entry-level prices surge, the mid-tier follows 6 to 12 months later. So here's the truth. The banks are saying growth. The averages look pretty steady, pretty calm, but beneath the surface, the affordable end, it is going to be chaos. There's going to be fierce competition there. First home buyers, investors, tight stock, strong migration, it's all colliding in the same zone. If you play it smart, that chaos can work for you. If you wait too long, you will be priced out. That's your daily property update. This is your 5 to 7 minute update on the property market every single day so that you can be a property insider. Make sure to hit the subscribe button so you never miss a video, and I generally want to hear your thoughts, so drop a comment below. By the way, in talking about apartments, I have done a video on how the property market is changing. We once did focus on land. That is now changing. Check out this video so you can understand the new demand equation and how the market is changing in 2025 and beyond.